Every few decades, the global economy changes direction. Old systems slow down, new ones take over. Raoul Pal believes we're living through one of those shifts right now, a transition that could move trillions of dollars from the traditional financial system into a new one built on digital assets. The reason is simple. Governments are trapped. Debt is at record highs. Growth is weak. And the only tool left to keep the system running is inflation. Central banks can't raise interest rates much further without breaking the economy. But they also can't stop printing money because that would crash markets and make debt impossible to repay. So they take the middle path, slow devaluation. Your savings lose purchasing power year after year, even when inflation seems under control. That quiet erosion is how the system survives. But before we dive in, if you want to stay ahead of these signals, make sure to subscribe to the Crypto Nutshell. It's our free 5-minute daily newsletter, read by tens of thousands of investors who want sharp, actionable insights without the noise. First link in the description. All right, let's get back to the video.
But you've said that the real danger is that everything goes to zero. What do you mean by this?
Okay, that's a big question. So everything going to zero, there's two forces that really I'm focused on. One is, you alluded to earlier, and we can go into it in more detail in a bit, which is the fact that the system of money that we know is being debased, which means they're printing money. And why are they doing that? They're doing that to pay the debts that we've accumulated over the years as nations, not only the United States, but all over the world. And that's driven by this aging population that's been happening. So money essentially keeps falling in value. And people realize that by the fact that their wages actually don't go up, but the cost of things goes up. And I'm not talking about food and stuff. That kind of inflation is more cyclical. What I'm talking about is the important things for young people is like, can I buy a house? So young people start thinking, why can't I buy a house? Why do houses still go up and I'm working really hard and I'm working 2 or 3 different jobs? That's because optically they're devaluing the value of the currency and it makes these assets expensive, but their wages don't go up in the same way. So that's one thing. The value of the currency goes to zero over time. So it's not an instant collapse. It's a slow thing that just makes life harder for everybody. The second thing is that most economic value is based on 2 things, either knowledge or labor. You either physically do things or you mentally do things. The value of those 2 things over time is going to zero because of the rise of AI and robots.
This is the core of his thesis. If money keeps losing value, then holding cash is guaranteed to make you poorer over time. That leaves 2 real options. You can hold assets that protect your purchasing power, like gold or real estate. Or you can own assets that benefit from inflation and liquidity, like technology stocks and crypto. That's why Raoul believes digital assets are where capital will flow next. They're the only part of the system designed to benefit from liquidity instead of being damaged by it. Crypto isn't a side bet anymore. It's the natural escape valve from a broken financial system. Over time, value always migrates toward faster, more efficient systems. Gold gave way to paper money. Paper money gave way to digital banking. And now, traditional finance is giving way to crypto, a system that's global, open, and runs 24/7 without intermediaries. What makes this transition different is that crypto isn't just another asset class. It's an entirely new financial infrastructure being built in real time. Stablecoins allow people to send digital dollars instantly across borders. Tokenization is bringing real-world assets onto public blockchains. Smart contracts automate what used to require banks, brokers, or lawyers. This new system is faster, cheaper, and more inclusive. It's technology doing the job of institutions.
After 2030, if you think about it, what I've described with the AI and the robots is infinite humans. That's what we're building here, is infinite humans that can come into the global economy. Okay, great. Economic growth picks up. But who gets paid for that growth? Who gets paid? Is it the robot companies? But it's not us. So then what do? Get a universal basic income? Maybe, but the government haven't got any money. So how are they going to pay that without debasing more currency? Okay, that's pretty fucked. So then you've got to think about, okay, if these kind of forces are at play, then what also happens when you put super intelligence into things like financial markets? Am I going to be a better investor than something with an IQ of 600? No. Can I operate faster? No. So what is a financial market at that point? How does the economic system work? The AI has a system of money. They're already trying to put AI and crypto together because an AI still needs to be paid for it as an AI agent. Like, agents are really like Fiverr, a website where you can choose somebody to do a specialized task. So an agent still needs to get paid like somebody on Fiverr does because they've got, rent and they need to eat food and live their lives. But the AI needs, go back to the same thing, compute and energy. So it's going to get paid. And some of them will generally operate at a profit, so they'll bear profit margin. But their agents are dealing with agents. They're subcontracting out work to each other. And so there'll be a system of money between them, which will likely via crypto rails is the only way of paying each other fast enough. So they're getting the economic pie. How does that work? If the agents are making the pie, people have been talking about the fact that single people can build billion-dollar businesses using AI. One person. So the whole economic system gets weird. It gets weird that it starts growing at an accelerated rate. The value doesn't accrue to us. Our savings have been debased, so they're basically worthless. And so the uncertainty becomes massive.
That might sound like science fiction, but it's already happening. AI systems are starting to pay each other using crypto. Decentralized networks are coordinating value transfers at lightning speed. This is why Raoul calls crypto the base layer of the next economy. It's not about speculation, it's about giving software the ability to interact with money directly. In the same way that the internet connected information, crypto is connecting value. It's how the digital economy will actually function. Raoul's background is macroeconomics, and his message has been consistent for years. Policy drives markets, not emotion. Since 2008, every time growth slows or something breaks, central banks do the same thing. They cut interest rates, and they print new money through quantitative easing. Each time, it's sold as a temporary measure, but the truth is, it never really stops. The more debt the system carries, the more dependent it becomes on liquidity. If they ever truly stopped printing, everything from housing to stocks would collapse. So, the money printer always returns, just under a new name or program.
What did they do in 2008? They did something really clever. Or 2008 and 2009. They said, we're going to print money. Quantitative easing, they called it. It's a fancy name for printing money. Pretend it's really scientific. It wasn't. We're printing money. What did that do? At the time, the collateral layer of the entire financial system was the housing market, and that had collapsed. And then that was pulling down everything with it. And everyone was defaulting on their debt. And nobody could pay back anybody. The whole system was in the middle of implosion. So what you do is remember, you lower the denominator and magically the value of those assets goes up. Suddenly everyone can service their debt. It stopped the system imploding.
Lower the denominator of what exactly?
Fiat currency, the overall system of money, because it was done by the US, the UK, the EU, China, Japan, Australia, Canada, everybody printed money. And what it did was lower the purchasing power of fiat currency overall, where the dollar is the world's reserve system, and those assets suddenly went up. And everyone's like, we're saved. Nothing had really changed. It was all smoke and mirrors. The system was broken, and they knew it, and everybody knew it. No, not everybody knew it, but people suspected it. So after they did that, they did a piece of magic, which was zero interest rates. We need to stimulate demand. Yes, sure. You lower interest rates, people are freed up to spend more money on stuff. But it was more magic than that. That was the smoke and mirrors again. What it was the ability of all the governments to not have to pay interest rates because they've just got all of this debt issue. So they're like, we're going to give everybody a break for 5-7 years. You don't need to pay interest rates. We're just going to keep our interest rates at zero and let all the corporate sector sort itself out. Let everybody sort themselves out by not having interest rates. I mean, how nice would it be for all of us to not have to pay interest on your car or your mortgage or your credit card for 7 years? Be very nice. That's what we did. It was basically a tax break for every government in the world.
The key takeaway is simple. Governments can't afford to remove liquidity. Every downturn is now met with more printing, more credit, and more intervention. That endless cycle of easing pushes money into assets that thrive on liquidity. Tech stocks, real estate, and increasingly, crypto. That's why crypto markets keep recovering faster after every crash. They're built for a world where money is constantly being created to avoid collapse. Most investors still judge assets by earnings or cash flow, but in the digital era, networks are where the real value is created. Companies like Facebook, Google, and Amazon became trillion-dollar giants not because of profits early on, but because billions of people connected through their networks. Crypto works the same way, but it goes a step further. In crypto, users own part of the network through tokens. That ownership creates a feedback loop. The more users participate, the more valuable the network becomes. It's digital equity without a corporate middleman.
Networks are always more valuable than anything that has just cash flow alone. And people are starting to figure it out, but don't really understand it yet. Is why Google and Facebook hyperscaled, is they were networks, as was Amazon. A network of buyers and sellers and tons of applications, and all the value accrued to Amazon. Everything Elon is doing is actually a network, but it's all still separate and people can't see it, which is why the stock always trades expensive. And people are like, I don't understand it. It's because it's a network and you don't see it yet. This is what NFTs are rightly. They're network effect pieces of art or a community. A networked community is what you're building. That's what all of crypto is networks, and networks accrue enormous value. And that's why some of this digital art is accruing enormous value and people don't understand it because of the value of a network. So there's a really interesting piece in the higher end of art of Xcopy, this British anonymous artist, called The Last Selfie, of which I own one of. The Last Selfie, there's actually 10 and they're all the same. I was like, yeah, whatever. But it's become legendary. And everybody wants one of those 10. And he's got another piece called Mortal, which is the same, one of 10, and it's another legendary piece. Now, if it was a one of one, so there was only one in existence, and let's say I own it, and you come to me and say, I want to buy your piece, I say no. And you say, try and raise price. I'm like, I'm not selling, it's not to do with the price, I love it. End of story.
That's why some digital assets explode in value even before they generate income. They're not companies, they're communities. When millions of people decide something has value and trade around it, liquidity and attention create a self-sustaining market. It's not always rational in the short term, but it's the same dynamic that powered every major internet platform. And for the first time, anyone with a smartphone can be an early owner in that growth. That's what makes crypto so powerful. It democratizes the upside that used to belong only to venture capitalists and insiders. Ethereum sits at the center of this transformation. It's where most decentralized apps, stablecoins, and tokenized assets are built. Raoul calls Ethereum the contract layer of civilization because it's where agreements, ownership, and transactions are recorded automatically by code, not lawyers or banks.
What is Ethereum? Ethereum is basically a gigantic scale network that records contracts. Oh, so it can apply to everything? Yes. And what drives a lot of the adoption of any of these things? Memetics. So think of it as a memetic contract new world, which is a replication of what we built as humans. It's all the printing press was, all of this stuff. In fact, it's all that AI is. It's all the same thing.
Does Solana do contracts?
Yes.
But
So
Ethereum's the first.
I'll come on to that.
Right.
So Ethereum was the first. Great. It's the OG. It's slower, it's a bit complicated, blah, blah, blah. So there's other fast ones. There's Sui, and there's Solana, and then there's Sui, and okay, great. But the financial system will likely bless Ethereum. Why? Because it's been around longer. It's gone through the ups and downs. It's been battle tested. And so the probability of you being at JP Morgan saying, we're going to build on Ethereum, the probability of you being fired for that decision is low. You can obviously be fired for a number of other reasons, but making that decision makes it easy. Then the more people that make that decision, the harder it is not to make that decision. So my guess is the majority of the financial system will build on Ethereum. Much like we're seeing the majority of art on Ethereum, because it just happened to be where people started doing it, putting art. And then we've proven that Ethereum is so secure for smart contracts, the most securest platform for smart contracts, that we can only entrust our highest value smart contracts on Ethereum. Some of that will change over time and different blockchains have their use. But so the memetic, the story we tell ourselves for Ethereum is now the financial system is moving to Ethereum.
Ethereum has proven itself as the most secure and reliable smart contract platform in the world. That's why major financial institutions, from JP Morgan to BlackRock, are quietly building on it. Other chains like Solana, Base, and Avalanche focus on speed and scale, but Ethereum remains the settlement layer, the foundation that everything else connects to. Over time, this could evolve into a parallel financial system, open, transparent, and accessible to anyone with an internet connection. The total crypto market is roughly $4 trillion today. Raoul believes that within the next decade, that figure could reach $100 trillion, not from hype, but from global adoption and tokenization. As assets move on-chain, liquidity will expand to match it. AI, DeFi, and tokenized real-world assets will drive the next major growth wave.
But we're creating a whole new layer that people don't see yet because they think it's all a bunch of nonsense. But really, it's just the future of the internet where money is embedded within it and value. So we talked about how you and I could get paid to capture our attention. This comes all on these rails. So if we're transitioning into this new system and we can all buy a bit of it, we can all make quite a lot of money. So you get the choice. Do you buy the S&P 500, which is what you're told to buy, or do you buy crypto, which grows at a lot? So then you start to realize once you do this for a period of time, you end up thinking, oh, fuck, I don't put enough into this. This is my answer. And the more people use it, the more the value goes up, the more it unfucks everybody's future because it's a different system than that fiat system that we talked about before that keeps getting debased. Right now, crypto is a $4 trillion asset class across all of the different tokens and protocols. A lot of this is just technology. So if you think about the internet when it rose, we couldn't invest in it. Eventually we could buy some shares in Google and stuff, but it wasn't the internet itself, right? It's businesses built on top of the internet. Here we can actually own the internet itself and everybody can. So it's like a public service good that we can all buy some of. Okay, that's amazing. It's currently worth $4 trillion today in its current form. If we just follow the trend rate of growth, I think by about 2034, it's $100 trillion. So only 4% of the journey. And this is why you can unfuck your future. If you're only 4% of the journey, you can make a lot of money. And you finally get to participate in this global internet infrastructure layer and a new system of money, and you sidestep all of the debasement of currency, and you're leaning into the future of AI because the AI are going to pay themselves using cryptocurrency, and you avoid all of the other issues we've talked about. So it becomes blindingly obvious that this is the answer.
Each stage of this cycle builds on the last. 2013 was about early retail speculation. 2017 brought the first global exchanges. 2021 was institutional adoption and stablecoins. 2025 and beyond will be tokenized finance and AI integration. It's not just about price appreciation. It's about an entirely new global financial layer being built beside the old one. And this time, it's open to everyone. The 20th century was driven by credit and demographics. The 21st century will be driven by liquidity and technology. Governments can't escape the debt trap. Central banks will continue to inject money whenever growth slows, and that liquidity will always flow into the assets best positioned to use it: crypto, AI, and tokenized systems. The old system is built on promises, paperwork, and centralized control. The new system is built on code, networks, and global participation. Raoul believes that shift marks the start of the biggest wealth transfer in modern history, from people holding money that loses value to people holding assets that represent the future. And if this breakdown helped, hit subscribe. It helps the channel grow, and you can always change your mind later. See you all in the next one.